Hey guys, what's the difference between a business credit card and a business line of credit? I get that question quite a bit from prospective clients, so I'm going to break it down for you guys today. Alright, first of all, I have some visual aids here. Notice I've covered them up with pink post-it notes. The information that I've covered up is anything that could be a potential copyright or trademarked information, so we don't get in legal trouble. Next, I've prepared a Venn diagram of all the information that I'm going to cover, of the differences as well as the similarities, and I'm going to make it available to all the viewers of this video at the end of the video, so stay tuned. So let's start at the top. We're going to start with the application and underwriting process. We'll start with the business line of credit. If you're applying for a business line of credit, the application process is going to be a little bit longer, between 15 and 30 days. The bank's going to request a lot more information. They're going to want your gross revenues, your net income, how long you've been in business, how many employees do you have. They may even request a copy of your tax returns. The business credit card, on the other side, is going to be a little bit quicker underwriting process. The bank's going to likely request less information. The underwriting process is generally going to be 2 to 10 business days on a business credit card. Next difference is how the interest is calculated on each of these accounts. Let's start with the business credit card. With the business credit card, you're typically billed on a billing cycle basis. What does that mean? That means you could purchase whatever you want on your business credit card and you have 30 to 45 days to pay it. So depending on where your billing cycle is, you have some time where you could float those funds at no cost without paying any interest. As a matter of fact, I have a client that is in the e-commerce space and has a seasonal business. So they sell products for holidays, Christmas, Halloween, Valentine's Day, things of that nature. And this client, what they'll do is they'll purchase inventory between 28 and 30 days prior to a holiday. They'll liquidate it all. Their sell-through rate is awesome. They've been doing it for a while, so they know exactly what sells. They'll sell it all, and then by the time the bill comes due, they already have liquidated all the inventory as well as made their money, and they will not even pay one dime in interest. So that's a clever little loophole on the business credit card side that you could use if you have some kind of a quick turn business. Now, let's talk about the business line of credit and how the interest is calculated. On the business line of credit, the interest is actually calculated on a per diem basis. What does this mean? It's simple. Basically what it means is you're renting the money every day from the bank. So let's take an example of this. Let's say you have a $100,000 line of credit and you draw on it. All $100,000. At 6%, you're going to pay $6,000 a year in interest. But what if you only need it for one day? What the bank will do is they'll divide your $6,000 in interest by 360 days. So your daily rate is going to be $16.67. So a great example of this is another client I have that owns a commercial cleaning company in which he gives his clients that he cleans for terms, and he'll do the job and then charge them 30 to 60 days later. So that floating in cash flow, he's not going to be able to do using a credit card. So that's where the business line of credit comes into play. He'll use it to float his receivables. Very effective technique, works for a lot of clients. Next is the difference in interest rate. You're generally going to pay a little bit more for a business credit card in interest than you will for a business line of credit. If you were to ask me what I've seen, it's going to be between 10 and 20% here and between 5 and 11% here. So it's actually a significant difference. Next is liquidity. With a business credit card, you don't have the convenience of being able to transfer funds back and forth and being liquid with it. You cannot transfer the money into your business checking account without paying an additional 2 to 5% fee depending on who your bank is. With a business line of credit, you have the flexibility to do so. It's completely liquid as long as you pay your interest, the per diem that we spoke about earlier. Renewals. So business credit card will renew every 3 to 5 years, and a business line of credit will renew every year. The renewal on a business line of credit is very soft in nature. What does this mean? As long as you haven't done anything extraordinary or violated the terms and conditions of your line of credit, the lender is likely to just roll it over and renew it. I'll give you an example. I myself had a company 10 years ago, and I got a line of credit for it. 8 years ago, we stopped doing business using that particular corporation. The line of credit is still around. It still exists. It's still in good standing. We haven't used it, but the bank just keeps renewing it for an annual fee. So we just keep letting it roll. All right, guys, now let's discuss the similarities between these two products. How are they the same? They're both revolving products, which means you could draw on them on demand and you'd be able to use them over and over as long as you pay them back down. So if you have a $10,000 credit card or a line of credit, you could use $5. As soon as you pay back that $5 and you have a zero balance on it, you have the full $10,000 to utilize whenever you want. Next similarity, now because they're open-ended and revolving products, in both cases, the lender has the rights to shut down or freeze your account if you do something that you're not supposed to. Most common offenses that clients commit in order to get their lines or credit cards shut down is they'll make late payments, or they'll keep it close to maxed out for an extended period of time. What do I mean by extended period of time? Anything above 9 months. You don't want to have a stale balance on your business line of credit or a business credit card. You want to pay it down. All right. Next similarity is you could set up online banking for both of them, which we highly recommend. That'll help you not make a late payment, and you could keep a running tally of what your balance is versus your credit limit, so that you don't get close to hitting it or even exceed it. If you found value in this video, please share it with a friend or a colleague. Also, subscribe to our channel. I'll have an awesome video coming up for you next week. And also that Venn diagram I talked about. If you go to the description section, there is a link where you'd be able to download that Venn diagram for absolutely free. Thank you for tuning in. I'll see you next time.